After recently plunging to a 52-week low, Tesla's stock price has continued to plummet. After a challenging few weeks, the stock price is progressively rising again, but it's still uncertain what the future holds for Tesla stock. Hi everyone, and welcome back to the Tesla stock discussion. The market capitalization of Tesla has decreased by over $20 billion after its September 18, 2017, stock price drop from $389.61 per share. The automaker's shares are now undervalued and may experience a cash flow problem if investors keep pulling their money out of the game. While proponents of Tesla, such as Adam Jonas of Morgan Stanley, see this decline as an excellent time for investors to purchase the stock, others, such as Dan Ives, think that Elon Musk's recent sale of Tesla stock could be a contributing factor in the stock's poor performance and the beginning of further valuation problems for the automaker. Why has Dan Ives made this statement, and will Tesla be experiencing worse instances in the future? Proceed within this clip. Before we begin, though, please remember to like, subscribe, and turn on notifications if you enjoy this kind of stuff so you can be informed about all that Tesla is up to date with. Tesla's stock price dropped recently after it was revealed that CEO Elon Musk had sold more shares of the company. As a result, the share price of the company has decreased by almost 49% year to date. Only a few days have passed since Musk finalized his agreement to purchase Twitter for approximately $44 billion. According to a recent filing with the Securities and Exchange Commission, Musk sold about 19,500,000 shares of Tesla over the course of 3 days in November, for a total estimated value of $3.95 billion. Following this, Tesla's stock fell by over 7% to close at $177.59, the lowest level in roughly 2 years. The share price of the corporation, which was already at an all-time low, fell even more as a result. Following this revelation, a number of analysts, including Dan Ives of Wedbush Analysis, expressed their displeasure with Elon Musk's behavior. Ives claims that with its prolonged Twitter agreement, Musk has effectively damaged the reputation of Tesla's stock story and is beginning to negatively affect the company's image. In light of this, Wedbush's Best Ideas list recently excluded Tesla stock. Ives attributed this to Musk's involvement with Twitter, which he called a dark comedy show on Twitter. According to Dan Ives, Musk is now more focused on Twitter than on Tesla, which has led to worries that the Twitter debate may have a detrimental effect on Tesla's reputation worldwide. Based on the stock research, Musk is progressively moving Tesla away from its enormous position of strength and has accomplished what the bears have been trying to do for years without success. He crushed Tesla stock on his own. Despite maintaining his outperformance rating on Tesla shares, Ives reduced his price objective from $300 to $250 in order to account for the overhang. Dan Ives elaborated on the matter, stressing the significant effect that Musk's actions have had on Tesla. He asserts that Elon Musk is the founder of Tesla, which has made him the richest person in the world. Ives went on to call Tesla the golden child of Musk's enterprise, noting that the carmaker has revolutionized the vehicle sector in the same manner that Apple's iPhone revolutionized the phone industry. In the automobile industry as a whole, as well as in the EV market, Tesla is a top automaker. The total market value of Tesla's 5 main competitors, Toyota, Volkswagen, Daimler, Ford Motor, transpired since Musk assumed control of the social media platform. The ideal course of action for Musk at this time, according to Dan Ives, would be to have people with experience in social media concentrate on Twitter and develop a plan to monetize the site and retain advertisers. While he concentrates on Tesla and SpaceX, Ives called Twitter a money pit. The managing partner at the Future Fund, Musk, has recently done certain things that have angered several other analyses as well. In response to Dan Ives' tweet regarding Musk's investment, Gary Black said he had been following that one about Musk's takeover of Twitter for the last 6 months. He continued by saying that Musk's expertise is still unfit for Twitter because the social media site focuses on expanding advertisements rather than engineering or production problems. He said in his final tweet that Musk should employ an advertising man to oversee the site. Gene Munster, managing partner of Loop Funds, also called Twitter a money pit for the upcoming year. However, well-known YouTuber and Tesla investor Dave Lee holds a different view, contending that Elon Musk's expertise is ideal for improving Twitter. He went on to say that Musk is the best at engineering, invention, and reimagining products, exactly what Twitter needs. Although Lee is generally positive about Musk's efforts with Twitter, He pointed out that the project will require more time and effort than Musk had anticipated, in addition to the consequences of making difficult choices along the road. Adam Jones of Morgan Stanley said that he believes the stock price decline is one of the opportunities for purchases that many investors have been waiting for. Even though they share the same owner, Tesla and Twitter are two distinct platforms with entirely different revenue and production structures. One of the reasons Dan Ives has faith in Tesla is the company's consistent high revenue figures. As I've said, he thinks that Tesla's EV story has a longer horizon, but he also supports the company's roughly 25% sell-down. The Twitter deal has caused enormous pressure on the stocks and is an excruciating cycle for investors to navigate. However, Ives cautioned that Musk should not take investors' faith lightly or waste it needlessly on Twitter. According to him, Musk needs to take a hard look at himself and stop obsessively following the Tesla narrative on Twitter. The insanity on Twitter must stop right now. I've talked about how I feel about Twitter's overhang and what Musk could do to stop the negative effects on Tesla. It's time to return our attention to Tesla during what could be a robust quarter of expansion and momentum leading into 2023. With 2 million units, the biggest obstacle for 2023 is still optimistic. Musk. According to Dan Ives, his optimistic opinion of Tesla has not altered. The only thing that appears to be worrying the Tesla bull is the potential damage to the company's brand should appropriate action not be taken. But what are your thoughts? Do you believe that Musk erred in selling more Tesla stock to Twitter? Tell us in the comments section below, and don't forget to share your Tesla valuation with us. For additional information regarding Tesla's recent activities, click on the following video that appears on your screen. I'll see you over there.